All right. Just jumping into it. So it's yeah, 20 to 10 on the Wednesday. So a little bit earlier today than I normally do the sort of daily takes and that, but that's all right. It's a little bit sort of prior to what's going on here. A little bit sort of prior to sort of volume and that coming in. So I think DXY is offline. I think gold's offline for another 20 minutes or so. So that's not too bad. Gives us a chance to have a bit of a look over without too much of a sort of distraction of volume. But so DXY, this is obviously the last sort of 2 days. It's definitely been on a bit of this sort of run back up, a bit of this bounce. Yesterday in the video, I was saying that look, it could be coming up to retest this underside. So this is the main sort of little area that we'd sort of identified over the last, well, this is going back from sort of September. So basically over the last month and a bit, also in change, that we wanted to see a break underneath this area, whether we were going to be sort of moving up or moving back down. These were the sort of main areas that we sort of identified to sort of say that, look, if we're going to sort of see a bit more of an actual sort of direction and some action apart from just this sort of consolidation, that this is what we wanted to see the break. And obviously we got that with the NFP on Friday. Monday, Tuesday this week, it's been firing back up. So if you look at this sort of low down the bottom here, this is actually very reminiscent. This is probably sort of taking us back a bit here. But if we go on to the daily and have a look back at like when it started this incredible sort of run, very similar sort of action. Strong move to the downside. This is on the daily. The last chart I was showing is on the 4 hour. But you're seeing the long sort of push down, little rally up, tries to push down again because you've got to remember this would have been a little bit of a yellow candle as well, or a bearish candle as well. Failed to sort of get that continuation, so sell, support, resistance, go for the next leg, and the reaction, bang, was that sort of big shoot off up here. So obviously, as I said, that's on the daily, and if we flip back to where we are now, just on the 4 hour, we saw a very similar sort of action happening here. You got the strong move down, support, little push up, goes for the second push, and again, this would have been a long sort of bearish candle, managed to sort of rally back up, get up above it, and that's your sort of confirmation of rejection of this sort of structure of move. So whereas we'd sort of be going support, resistance, bang, want to go for the next leg, and down in these sort of motions, we obviously failed to get this part of the leg happening. So in result, sort of, whoop, just all over the place there. Anyway, the point being is that we didn't get that continuation down there, and that's the rejection to move back up here. So, it's not in completely sort of like shock, okay, wow, why is it doing this? Why is it moving around like that? We know it was because it was coming off this sort of daily zone that we'd sort of identified previously as well. And the fact that it could get the close down underneath this area here, and this is on the daily, shows a reason and a fair expectation that this could be a short-term base for a push-up. We've got the bit of the retest and subsequent rejection of the underside of this zone now. Probably said it a little bit better on the 4 hour. So now what the target is for here is the same as this sort of action. So we've gone down, we've got support, we've moved up, found a bit of resistance. Now we're going to be targeting these lows down here. So these are the lows that we want to sort of get through now. Really, if we can sort of get underneath this zone here and a close under here, then this is going to be, again, the same sort of price structure of sort of down, support, resistance, re-attack this bottom previous support. If we break through it, then we go for the next leg down. The danger, well, not so much danger, but the thing you need to sort of realize with these things as well is just like this pattern, just like I sort of showed on the previous sort of bottom a couple of months back, is if we go down, we come up, reject, and then we sort of come back to test this low here. If this low doesn't sort of supersede or sort of like drop lower than here, then you're going to see a result similar to how this pattern happened, and it shot back up, and we're going to see a push back up here. From there, there's no sort of guarantee. Basically, what you're doing is you're going to start retesting that previous level there. So your options there, you could potentially be ranging through this area, or we could see a push back up into this range as market sort of, rejects the idea of selling US dollar sort of further off to the downside. But certainly, yeah, look, we've got the big push back up. If you take the fib from this whole sort of move, we're only at the 38, which is a pretty strong sort of a continuation. If you did also want to just sort of do it with the straight drop off, we're up around the 61, and this is what I was identifying yesterday, that 61 came right in the middle smack bang of this move here. So, I mean, obviously with fibs, you generally take the whole move, swing move, but, you know, depending what sort of time frame you're trading, I took it from these highs down here, and then which is that one sort of move with the sort of coming into NFP, and then bang up here because we had one move up here. So I was just looking at that individual move coming down here. So yeah, 61 there, the 38 for the full move. If we get down onto a lower time frame as well, this is what I was looking at sort of through the session last night, that while we were coming up into this area, there was a couple of thoughts. I mean, obviously, sort of, you know, the major one being the sort of retest of the underside of this zone, but we're also seeing this little interesting sort of negative divergence happening. So again, it just kept sort of charging through every time. Look at this, it's going down. Well, that looked like a top. That looked like a top, but you know, it kept sort of pushing through. We got a little bit of this sort of head and shoulders pattern happening here. So if this is the where are we at? It's all sort of actually sorry, not from there. It's all sort of head and shoulders happening here, something like this. And then if that is the little play, obviously, which it was, we got the break, we got the retest. Now we want to see it take out these lows here, and we're going to see continuation of the downside, sort of cooling. We do have a little bit of a sort of zone through here, which might sort of hold up a little bit. I mean, it's sort of tried to sort of bounce off this area here, but I'd say a breakdown through here. Yeah, so if we get that alert going off there, I would say that's a little bit of a confirmation of a move back down here. Tiny little gap on yesterday's morning. And again, this is what I've been saying with DXY. Watch for those gaps in the morning because 9 out of 10 times, if not more, it's going to follow the direction of those gaps. They're only going to be small and subtle, but they are there. And this chart, this TVC thing, doesn't actually show proper gaps. Like it sort of opens 15 minutes prior to the hour. So depending on what platform you're trading on, they'll sort of show a lot more prevalent sort of gaps. So like, you know, this would be the first candle here. So that would be your close. So that, in fact, would be your gap. So it's just something to watch out for. But they're very subtle on this chart. But 9 out of 10 times I found that they do follow that direction for the session. So in short, sort of, I think sort of with DXY, I do think we're going to sort of be starting to see a bit of a move back down to this 104.90 area test. A rally and pull up anything higher than that, then, you know, we could be looking at sort of getting a higher low in this movement, and then we could be sort of seeing further appreciation. But I still have my price target short term for DXY down at the 104.20 zone. So I think one more sort of leg down here, and if we can, obviously, if we can break and close underneath these previous lows, then I think definitely that price target could be coming in line pretty soon. And again, this price target, if you look at it, it's only the 38% of this entire move. And as I've said with DXY, and I showed with that previous one, DXY loves a deep pullback, and it doesn't affect its overall motion of it all. It loves to sort of swing back and really stop people out who sort of jump in too early. So yeah, I'd say sort of, look, we're overbought. This is on the 4 hour. We're overbought. We're tipping down. We've got 3 bearish candles coming so far. If we can take out that previous 4 hour wick where we've just put our alert, I would say that would be a nice sort of confirmation that we're going to see a bit more of a cooling. But I'll be watching for that little gap on the open to sort of see which way the market seems to push it. We flip across Aussie. Aussie continues to obviously disappoint. We had that had the RBA rate rise yesterday, and look, it went up 25 basis points. It was heavily sort of telegraphed, predicted, whatever you want to call it. And I was saying in the video yesterday that watch for the zone, or the price level, sorry, where the data drops, and if it takes out that level, like that price of where it was when the data dropped, you would see a fairly steep sort of downside. And I was saying sort of, 64.50, I was saying sort of back into this little chop zone here. Part of me didn't want to believe that that was happening because we've had such a strong sort of bullish move up here. We got rates rising. I mean, everything was sort of saying that, hey, look, you know what, we should see further appreciation. It was finally looking like it was time for everything lining up for Aussie. But not only did it take out that level, it took it out in like, I don't know, 20 seconds, maybe not even that, 15 seconds. Like the market was just quick on the money to smack that down. And what I was saying yesterday as well, it's like, you got the sort of people sort of predicting, excuse me, you got the sort of people predicting and going, okay, yep, rate rise is coming, we're going to settle into it. But at the same time, we had DXY rallying. And this is what I was saying with DXY, that sort of, I know Aussie's not part of DXY, but US dollar broad buying, um, we can have seemingly positive data, and if people are still buying the US dollar, they don't care. Aussie's is not that big. It's like sort of New Zealand is to Australia, Australia is to like the US. So it's just that smaller kind of nothingness thing. Like, you can have good data, you can have bad data, but if it conflicts with what is happening with the US dollar, well, it doesn't really matter so much. Well, it obviously still weighs in a little bit. Like we got hammered a little bit, but we saw it across on everything, on cable, on euro. All these things got sort of knocked back yesterday. So anyway, it came back down into this zone as we sort of saw. One note I will sort of say, I was listening to some guys last night, and they were sort of saying that in regards to the rate rise, two things actually. One was that it seemed more that it was the reasoning behind the rate rise could have been the factor that it was sold off so much. So the rate rise was coming basically due to inflation. Well, obviously due to inflation, that was the driving force behind the decision to raise the rates. But that's sort of different to sort of, the sort of fundamental reason if, say, they were raising rates because the economy was pumping along and the economy was doing super strong. So in that instance, people would be sort of welcoming a bit more of a rate rise. Whereas this one is just sort of like, well, everybody's been fighting inflation. There's no different. There's no surprise. So, it kind of lost a bit of its sort of a bit of its appeal, so to speak. So that was one part of it all. And the second one that sort of seemed to be the general consensus, from what I could see anyway, was the sort of particularly the wording, which I think also subsequently got changed or altered or something, sort of maybe afterwards. I'm not 100% sure on that, but sort of saying that sort of again they're taking this sort of like slightly dovish sounding tone towards it all, which I don't quite understand because they've it almost sort of seems like they're trying to sort of like save face. They're like, hey, look, we're putting the rates up, but you know what, we're not really the bad guys. We're going to sort of go a little bit easier, and we're going to wait to sort of see. Just do it. Like, you know what I mean? You're not there to be people's friends and that. And if people have overborrowed, well, that's tough. Of course, a lot of people are doing it tough, but that's not your job to care about that kind of stuff. I mean, you look at how some of the Fed people speak, and obviously some people are more hawkish than others, but their sort of like wording is like, we're not afraid to do what needs to be done. We're not saying we're done yet with doing the rates. Like, that's the sort of approach that you need to take because you're not there to be people's friends. You're there to do a job. And basically, number one sort of thing at the moment is get that inflation back down to around that 2% target. Sort of babying and coddling people by just sort of like going, oh, we're going to have to wait to sort of see what happens. Well, of course, yes, you got to wait to see what happens, but deal with that as that comes. Like at the moment, just, just to say, we're going to have to do what it takes. You know what I mean? They talk about this, all the sort of thing of like, oh, this Bullock chick has sort of come on and she's, going to come across with like this don't stuff with me kind of attitude. Well, let's see it, not sort of this sort of like, oh, you know what, it's sort of like I'm doing it, but I'm still your friend kind of thing. Like, no one cares. You either do it or you don't do it. Anyway, whatever. I'm getting distracted on this. Point being is that we saw a little bit of a rally off where are we at here? So that's further down. So we saw a little bit of a rally off this lower zone coming down here. So this is a bit of a, you could almost sort of call this a bit of a back test of this area here. We've seen it sort of, this is the top area as well of this head and shoulders that we had previously, sort of going back in sort of like towards the start of October. So we know the market likes to churn it around here. We saw it a little bit sort of coming up here as well, and we're starting to see it happening again here. So realistically, if DXY and US dollar sort of continue to sell off, and particularly, as I said, if it attacks those lows and we get the lower low, we're going to see Aussie sort of push back up here a little bit. If it does sort of manage to rally a little bit earlier, we're going to have to sort of see how the market sort of takes on it. But I mean, you could, this is a downside idea, but I don't think this will be happening. You could be seeing a little bit of a head and shoulders through here. This obviously being the sort of the head. If this were to be the case and play out, your measured move is bringing you right back down here to the 63.10 zone. So I don't think this will be the case, the head and shoulders here. Generally, I thought you'd expect the sort of it to be a little bit closer. That's a massive neck, massive head on that. But we'll have to sort of see. I think if we can get back up above 64.50, I think on the lower time frames, we've got a bit of a sort of resistance area at 64.60. So I think sort of if we can get above that 64.50, which is that what would be that sort of left shoulder, if this were to be the head and shoulders, I'd say we'd sort of get a bit of a push back up here. And I don't think, I can't see us sort of taking out new highs necessarily at this point. But certainly, as I said yesterday, I don't think this is like the end of the Aussie of this move coming up here. So I think certainly we're going to be finding a new range, 64s to 65s. And then obviously we've got to wait to sort of see how we get those sort of breaks. But the big one for the top side is 65.20. If it's 65.20, which is the top of all these sort of spikes previously, if we can sort of get above there, then I think that's going to open up the door to a 66 push. So we'll have to sort of see how we go. But I expect a little bit of upside with Aussie here, at least to come up here and test 64.50, 64.55. Cool. All right. So flip across to gold. Gold had a little bit of a tough night, but this is what I've been sort of saying. The sort of slightly rolling over pattern seems to be playing out here. I'll mark this one out just because you can see sort of like this is that sort of consolidation. This is what we were sort of seeing, you know, buyers, sellers. It's been back and forth. It's been confirmed 3 times at the top, 4 or 5 times at the bottom. And once we got that break under 77, so get this out of the way, make it a little bit clearer. We saw this sort of harsher sort of sell down. If you look back on my video from the weekend off this chart here, this was the daily view on this one. This chart's just a little bit cleaner. This is what we identified as an action happening, sort of coming back down. If we broke this sort of 70, high 70s, 80 zone here, that we would see a push down. And obviously markets come back here. I've got a couple of buys that have sort of laid in, sort of coming down through this zone here. Obviously, sort of the supports are holding so far, so it's been a nice sort of little push-up reaction. And obviously, these are nice. If we do get this play out that this happens to be our range, these are some great entries down here. You know, give it a couple of days, and we could definitely be back pushing up around the 90s or so. So yeah, we'll have to sort of see again, see which side of risk sort of gold wants to fall onto, but at the moment it seems to be sort of re-establishing its inverse connection with DXY, because obviously we saw DXY push the last 2 days. We've seen gold push down the last 2 days, so it's not really sort of seeming to be running with the sort of the risk off. As for that whole sort of you know, Middle East situation, it seems to have really died off on the news. Like I know it's still there and it's still large and it's still happening and all this kind of thing. But as I said, in relation to the markets, it doesn't seem to have had the impact that a normal war would. And certainly the amount of data and news coming out surrounding it has dropped right off. So everybody thought that it was going to be sort of the thing that's going to kick right off. But you know what I mean? That's what got gold going. But that's kind of disappeared. And that's why sort of we're starting to see a little bit of a waning and a little bit of a sort of push down in gold prices. Look, obviously it's not the only thing that drives gold, but that was the reason that gold got this massive push up here. And remember, at some point it did leave, well, at some point, this point, it did leave a gap down here. So I'm not sort of saying that it's going to come back down here. As I said, I'm still in the camp of sort of higher up past 2000 for gold. But it's still something just to keep in the back of the mind. And as I said, like DXY actually left a gap right up the top as well. So, given the right kind of circumstances, potentially, could be weeks, could be months, whatever, gaps do tend to close. So it's something to keep in mind, and that for sort of super long term. But I mean, that's not for me. I'm not investing, I'm trading. So anyway, back to sort of the here and now with gold. Jump back onto this other chart here. So we've got a little bit of this sort of channel resistance coming up here. You can probably see it better on the lower time frame. We sort of, yeah, we've got this sort of little bit of a channel resistance, which it's pressing up against here now. Look, a little push up from here. I still expect that we're going to have a little bit of a push back up to retest these sort of like high 70s, 80s zones. If it can get back up here, as I showed on the other chart, this would be the sort of area to sort of get back up into around the sort of 90s. And then we've got this sort of like little midway section of this sort of main upper range, I guess you'd call it, where we can sort of see here previously sellers, buyers, buyers, sellers, sellers, whoop, and obviously on the way through here. So I think this is going to be the one that's going to be the sort of the definer of whether we're going to sort of keep on pushing on with this. Of course, there's these other sort of lower highs that were coming in here, but certainly I think if we can get a breakout of this channel, then we can start to sort of go, okay, well, where might we possibly be pushing up around? And look, if we can get back up around this sort of 86 to 90 zone, I'll be looking to sort of book a little bit of profit here just to sort of wait to sort of see if it can push back past those 90, 92 zones. But again, I think sort of with I think the inverse relationship with DXY is sort of re-establishing at the moment, and that will sort of give gold a bit of a push up as we see DXY continue to sort of cool off towards the lows, if that does happen, of course. All right, finally, we go across with China. So China, we can see back onto the higher time frames here. We know this area is very strong for the buyers, but if you look at the reactions we've had every time coming out of here, we had one very similar with this one, long wick, but that's really seemed to subside quite quickly here. So it's at a crucial point, in my opinion, with the Yuan with China. Like as I said, look, I've got my alert set here for confirmation of this move to the downside. I think these are fairly reasonable sort of price target zones. Obviously, looking for the downside here. As a sort of first one being the measured move of this range, which obviously it's just been trading since. I mean, we're going back to start of August, 2 months here, or minus a week or so. So I think a break to the downside here, we're going to see a fair bit of the market go, okay, look, we're giving that up. This is the sort of rising support, which we've been sort of looking at for, the whole of 2023. I think a move down to this 720 is a sort of reasonable sort of first target for where we go. If we drag this across, just have a look where else it comes in. Got a little bit of support just up above it kind of thing, so we'll have to sort of wait and see, but certainly, look, this negative divergence still continuing to play out. This RSI isn't quite sort of cooled right off yet, and it's not about to sort of tip. So, anything can happen with these, but I think this might finally be the time that we get that sort of breakdown. Obviously, I've been calling it this time, to sort of get down under here, but, this great China grind, and it just keeps on grinding sideways. If we don't get the breakdown here, then, of course, just on with the range, on with that sort of back and forth chop. But, if the alert goes in that, I think sort of we're going to be seeing push down towards that price target quite easily. Copper sort of failed a bit yesterday. It looks to have sort of like held that sort of upper test here of this zone. I really thought, so if we jump in, I don't really trade copper on a sort of shorter time frame, but I really thought that the fact that it had broken past these highs started to make this little triangle. I was like, okay, look, this comes up perfectly, come up into our price target. Once it failed this hard, bang, all the way back down here. And look, it's, as I said, I don't trade on a sort of lower time frame as such, but you can see that this is the area that we marked out, and yeah, we've been trading this lower range to the higher range a fair bit and basing it off. And this is what I've been saying, the horizontals have been the ones that we're really sort of trying to trade further on. And we've sort of seen it sort of, obviously the buyers have sort of come back in here as we've seen previously at this level as well. So I still think that this is the upper range. So, you know what I mean? I think this obviously also coincided with that DXY push. So I think sort of I still have this sort of price target level as a sort of short-term target. I think it's just the fact that we're not getting the super sort of like ranging things. I mean, the kickbacks and the swings in between these moves are quite wild. So it's nothing at the moment to be sort of concerned about. I would say if you take out that wick low, then we could be seeing a push back down. We've got a little bit of a sort of shorter support over here, but realistically, I think it sort of would be pushing us back into this sort of lower zone. Uh, Put that across there as well. It's a bit of a support, but I think that would be pushing. If we sort of break these lows here, I think we'll be looking for a failure of this upper range, and then sort of we of a push back down into this lower range here. All right, cool. That's about it from me.